Right. Good morning, good afternoon, good evening. We're looking at February the 28th. Let's see what we're up against. Ba, ba, ba. Don't mind me, I'm a little bit out of breath. I just came running into my computer room. Uh, when we're looking at the calendar, as far as we're concerned, this is all oil related stuff, so really nothing applies to us. We do have a bill auction later and speeches after that. All right, so for the time being, we can go and look at what's happened since yesterday. So yesterday we created a doji. Today we have a bearish pin bar. If we're looking at this as we speak, we have a lower high, much lower low, and we're building this wick. If we measure the wick itself, it's about 31 pips. The overall day is about 48 pips, 49 pips, and our average is 51. So good enough for government work, right? With the bearish bias in mind, we should assume a continuation to the downside, right? But the risk remains revisiting these wicks, right? So anything can happen. We could have an extension, right? We could go back up. As far as we're concerned, we have to trade the facts. And so we know where the risk is, and the facts are pointing in a different direction, right? So as far as I'm concerned, I'll be willing, able, and capable to sell all the way up here because I'm looking for further downside, right? So if I see this on an hourly scale, right? So in the last 16 hours or so, we've made this V-shaped bottom, but we did not go to the moon, right? Conveniently enough, the market took us exactly to resistance and a little bit more. And when I'm looking at this, I see slowing momentum up, right? Which is axiom number 3. And so what I want to do here is become a seller, right? And that defines my risk. I can clearly see where I'm wrong if the market keeps going, right? So measuring this right here, what does that give us? 37 pips or so, right? Just a little bit, 1 pip bigger than our 4 boxes. All right, so this is an important level. This is that red line that you see right there. All right, so I'll mark that in red. Now if I go down to my 5-minute chart, and we can start highlighting the ladder that we expect the price to more or less obey. All right, so previous support, previous resistance, previous important levels should still be useful to us. All right, so we just want to highlight a ceiling of some kind, right? We want to highlight a floor of some kind, and then in between this, you want to highlight previous support, previous resistance, previous levels that the price reacted to. Right? And this is all done with your mind's eye. There's no need for deadly accuracy here. This is just setting expectations, setting the stage for a call to action, right? Maybe you have a decision to make when you get to these levels, right? Maybe you need to add to your trade. Maybe you need to remove from your trades, right? Typically that will take place at one of these levels. Right? And that's because price reacted there before, right? So now we have this, ladder built. We can expect the price to go up the ladder or down the ladder, right? What I don't want to see, what my risk is defined by a move up, right? If we keep going up, we're going beyond the 4 boxes that I'm measuring, and that would kind of reset everything, right? If we measure from the very low, we're at 4 boxes. But if we measure from here, we could go up another box, right? So my risk is defined right there. And as such, when I came to the computer first thing this morning at about 5:30, 6 o'clock my time, I started building a short position as the market was moving up. I mentioned that in the chat room, right? Selling expensive. And as the market kept moving up, I kept selling expensive, right? I built a position that should pay me in time, right? It's already started to pay me a couple of trades, right? So as we speak, I'm going to be continuing this behavior. I'm going to be selling green candles in a bearish market. Okay, so I'm expecting this up leg here to be complete. And this is now the start of the next down leg, right? So I'm resetting my box right on that swing right there. And then I'll be reusing these boxes to measure the next leg down, right? This is just for a reference, right? My work is happening right here, right now in the current box. All right, so I have to wait and see a green candle and take a trade. All of our trades from yesterday closed in profit. Nothing touched a stop loss. If you stuck to the plan, you would have survived and made money. Ideally, we're going to do the same thing again today. Sell expensive and walk away. We don't know the future, but from what we can see here, this might be a triple top, and we cannot call this a triple top until we break the low of the range, which it's creating, right? So it's creating this range. We have to break the low of the range in order to call this a top, right? Until then, it could be a double top, it could be a breakout, it could be, a million different things, right? We don't know until we see it. A green candle, I'll take a sell right there. I think that's my fourth in that box, so I gotta wait it out. Some of those trades up there are swings, just like these ones, right? This is a swing trade. This is a pile of swings. I built a swing position because I am here for a few hours today, and I'm hoping to make 3 pips, 3 pips, 3 pips with you guys while we're recording. Okay, so we've defined the risk. We've accomplished a top-down analysis after looking at the calendar. It took us about 10 minutes. We've already got a bias. We've already got, trades in place, or I do anyways, and waiting to get paid. Right. The calendar is very light for us today, so that's a good thing. The main event was an hour and a half ago, and basically the US GDP quarter over quarter came in slightly under expectations. That gave the euro this breath of fresh air. And considering, we are month end, typically month end brings dollar selling. It's in the right time to do this, right? It's in the right time of day for this behavior. Tomorrow, leap day, should bring with it its own volatility. Right, green candle. If you can take a trade, take it. Right around here. I've already got 5. Beautiful. That's what we're looking for. On the daily, when we're looking at it from the top down, this right there really emphasizes what we've been targeting for the last few days, right? That's kind of been the move we've been looking for. And then we would expect a continuation of this into the end of the week, Thursday, Friday, maybe. All right. We started the week looking for a retest of the high, which clearly failed. And now we're midway through the week and we've retested more than half of last week's travels. Are we going to make up for the other half of last week's? Right? So this defines last week, and this right here defines what we've done over the last 3 days. It looks like it's heading slightly lower. Right? If we look at it from the breakout perspective, where this move happened, right around that 760, 750 mark is where we're looking to return to. Right around this level here. Okay, so get ready for more negativity from the euro side of things. Right, after the last few weeks, this is reset this way, and then as of last week, we're right there. All right. Right, slowing momentum up, axiom number 3, playing out according to the plan, right? Rotating slowly to the downside. And that rotation does not necessarily indicate the South Pole, right? We could be waffling sideways until the next reason to move, right? Without a catalyst, sometimes nothing happens. Back to my 5-minute chart. We're witnessing the evolution. Okay, and we're making money with it. All right, let's see a little drop. We want to see a little move lower. This, like I said before, is just for reference. I can just move them away. If you can take a click, take it. Right? We've been given many opportunities in this box here. Right? Breaking the top of the box, this particular box would change things, because if you start from the very bottom, we already know this has moved 4 boxes up from the very, very bottom, right? 1, 2, 3, 4. And if we have a 5th and a 6th and a 7th and so on and so forth, we are testing this resistance, right? We're testing the ladder. And we know what to do, right? We have the money to deal with this environment. Right, I'll put this right over here. Actually, I'll put it right on the side. Right, we don't know if it's going to go to the bottom or go to the top. We're letting the market choose, right? Because it exited the previous box. It exited the previous box on the side, not on the top, not on the bottom. We have to give two boxes and let the market choose the next move. Right? I suspect because of the slowing momentum up, I'm thinking something like this is happening. But, you know, I'm wrong often. I could be wrong again today. Right? It's a probability assessment, and it starts from the top, right? You have to assess the bigger picture, you know, the fundamentals, the macro environment, and then work your way down. In my case, a 1 minute chart. And on this 1 minute chart, I'm targeting a small, achievable, repeatable goal, and it's trend ambivalent, right? It doesn't matter what the trend is. It's how I manage the outcome that's more important, how I manage my behavior, right? So if I can stay calm, stay in control, and manage plan B, plan C, plan D, I can overcome whatever's, you know, thrown at me, right? It's mind over matter, right? Eventually, if you run out of money, that's kind of the liability we face, right? You run out of opportunities to fix the issue. So we got to be careful with that. Let's just double check the size of this. 60 bars, 9 pips. All right. If you want to double check, this current leg has been a 3 box move, and now we're going sideways, expecting a pullback. All right. If we go back to our 5 minutes, we have to remember this right there is what we're stopping into, right? That level right there. So pushing higher gives us an opportunity to sell a little bit more, and pushing higher even more gives us another opportunity to find a possible top, right? But if we put this right there on this low right here, on this low, right, will it give us the full 9 pips? All right, take a sell right there. So how far am I from breaking even? About 15 pips away from breaking even. Right? 1.5 boxes. Right? You can feel the pain. All of the stop losses that were hiding up top there, they're getting wiped out. Right? We're almost at the bottom of the hour. Well, 15 minutes. That usually plays nicely with the outcome of our plan. We've already fulfilled the average daily range. Right? Keep that in mind because we're basically sideways unless we make a new high or make a new low. Right? So this is why selling at this particular level here is interesting. Right? When you put a Fibonacci on this entire move, right there, right? This is the environment we're willing to sell into, right? Between 50 and 61. And that's typical for this system, right? 3 to 4 boxes is a normal environment. If you measure back from the bigger time frame, you measure the upper move, you know, what led us to here, we're back to that 38%. that we were testing a week ago. All right. Wrong time frame. This level here. Right. This is the environment we have to be worried about. Right up here. Right. So yeah, the ideally you can be wrong and still make money, as long as you know how to fix being wrong. Like eventually you have to drop the shovel, right? You just can't keep digging. And that's kind of what we do by targeting breaking even. Right? Breaking even is a strategy. It's an exit that very few people exploit. It's an integral part of the strategy, right? It's built in to the outcome. We use breaking even to repair low probability trades, not just mistakes, right? Sometimes you do everything right and the trade still goes the wrong way. It needs to be fixed, right? So yeah, it's in the problem solving skills. And by showing up and collecting those skills every day, acquiring the skills, a lot of it boils down to poor judgment, making mistakes and not repeating the same mistakes. Discipline. You can call it endurance. Right? That red line, it's still there staring at us, right? This level right here. Here's that slowing momentum up. Actually, on a 5-minute chart, it's harder to see it, but large, medium, small. On the 1 hour, it's easier to see. Axiom number 3 plays out in our favor more than once per week. That's more or less how I exploit the 2 hour window that I have, right? I build a position and then I let axiom number 2 or 3 pay out that position. If you're not sure what axioms I'm referring to, let me bring them up really quickly. Oh, hey, what's happening? So we're looking at this here. Axiom number 3, the distance between the pivots is a purest measure of momentum. And in our case, this is what we're looking at here. And as such, if you measure the gap between the space here, it's shrinking, right? This gap here is bigger than the gap right now. And that indicates slowing momentum. That tells us the market is running into resistance, right? And so we can use this in our forecast. It's only a probability, but it's allowing you to see the probability shifting. And if it fails to shift, we obviously don't have slowing momentum. Right. The flow, the month-end flow is what tends to push these limits. Options expiry today. If we look, oh, there we go. See, we just broke the top. Options expiry today, which took place 25 minutes ago. The market was looking for 850 or 865, and I think we came shy about 20 pips. Right? We were at 8 o'clock. At the expiry, we were at 8:30. So we came 20 pips shy of the targets. Right? So if this is a break, we can maybe go up to here, 842, 845, right? Which so happens to be the next rung on our ladder. Right? Large bar. What's this bar size here? This big green bar is 23. The one in the middle, 12. And the current one, 10. All right, I remain a short. I remain bearish. I remain selling. Now that I'm in box number 2, or my box number 2, I can sell here. Sell 1, sell 2, and a little push higher, I'll sell 2 or 3 more. All right, I'm entitled to recycle trades. A lot of it is allotted, right? So this allotment, 1% per box. You psychologically prepare yourself for doing this job. Like, I have a range, and I'm operating within the range. As long as I operate, within my own personal limits, my own risk parameters, my own psychology does not get threatened. All right. I know my personal boundaries fit these 4 boxes. I'm willing to take trades right up to the edge of the 4th box. The probabilities are still valid until they're proven otherwise. And hence the pain factor. Breaking levels, making new highs, just so you can go back and make lower lows. Breaking ranges is threatening to a lot of folks. All right, remember the ladder we built? Right, we've gone up multiple rungs, 3 to 4 rungs. This is the time we would expect the pullback to be complete, right? Time of day usually brings with it a resumption of the trend. All right. So we've layered a bunch of trades between this box here, this box there. I myself have a bunch of swing trades on, which are a different play in the playbook, right? But it's still the same idea. We're still targeting lower outcomes on the week. We're playing for the next move, right? If this is the current move right now, the current move is not going to the moon, right? So we built the position in order to exploit the next move. Let's see if we can close some trades in the next 30 minutes or so. That'd be awesome. I'll be able to, leave you guys with a plan. Maybe we can keep trading. We'll see what kind of position we're in. This clock box is really quiet today. Let's go take a look at the dollar index while we're here. All right, so dollar index on the intraday basis, we're back to support, right? Dollar selling, month end. Right? The yields are at support, right? We have to be cautious of this, right? We are looking for upside here, and we are looking for upside here also, right?
1 minute remaining. I'll lead with EIA crude oil inventories.
We're just looking to build a short position here because we're looking for further upside. Okay, so that's the game plan, right? We just don't know how much further this has to go. The box puts us in the ballpark, and then inside the box we sell resistance or buy support, whichever.
10 seconds.
This is oil news coming, should have zero impact to what we're doing.
Build for spot 199 million. Build for spot 199 million. That's higher than the expected build of 3 spot 717 million. Gasoline inventory. Draw 2 spot 832 million. Draw 2 spot 832 million. That's higher than the expected draw of minus 2 spot 835 million. Distiller inventories. Draw 0 spot 51 million. Draw 0 spot 51 million. That's higher than the expected draw of minus of 2 million. Crude Cushing inventories. Build 1 spot 458 million. Build 1 spot 458 million.
This is it. Let's wait this one out. Right, so going back to the axiom number one, testing for support. If you find support, you have an upward move in price. In today's case, we're testing for resistance.
Petroleum reserve up to 0.743 million barrels at 360.
So today's case, we're testing for resistance, and therefore we would expect a downward move in price caused by supply, right? And then if we fail to bounce off of resistance, it begins a trend, and that so-called trend will have pullbacks and so on and so forth, and we can measure this to give us a clue as to what's happening next. And that's axiom number three. So we make money or we fail to make money and we become repairman, and then we can have an idea how to repair things, where the next move is heading, right? So the three axioms relate to the core patterns, and we exploit this on a daily basis, right? That's the whole strategy in a nutshell. Right, so we're either testing for support and or resistance, or we're moving the box, and then we know after having moved the box so many times what should come next. And these are just probabilities and statistics repeating over and over and over. I don't want to interfere with those statistics and that market behavior. I'm the last variable. All right, so it is now past the bottom of the hour. It should be safe to see a retracement on this up leg. We could be going sideways for the rest of the day and accomplishing absolutely nothing here. That's how the market really gets under our skin. You create the best of plan, and then you have to wait 3 days to see it come through. we have to break through 845 before we can see 865. And so that's a tough ask. All right, there's a lot of resistance here. This, right, there's a lot of resistance in this zone. Right, lots of reasons to not see the market able to go here. Let's close some trades so we have something to show for the day. Statistically, we're still moving ahead. Oh, we just closed some. Yeah, there we go. Winners, chicken dinner, yay. Back under that red line would be nice. Perfect. That's what we want to see. Yeah, this is it. The way we are spreading our risk allows you to create an environment that you can control, right? By opening trades up at the top, you're moving break even. By closing a loser, you're also moving break even, right? By changing their relationship, we don't want to do that too much. We don't want to be heavier or lighter at one end versus the other. We try to spread it evenly. And that's the idea behind 4 or 5 per box, right? It's how the opportunities are presented to you may not line up. So, you're given discretion and you have to see the facts uh, in order to deploy, your trades. Right? This is the problem I run into. I end up with too many opportunities and not enough money. So eventually you have to pause, right? And so pushing up, I'm recycling these trades right there. Boom, boom. I think I had 2 there. And so I'm putting 2 back on. And then we're just going to expect a slow drift lower over time, right? Considering the average daily range has been fulfilled and we're running out of time for the European session, leaving only North America. Beautiful. Ba-ba-da-dum. The only thing left on the calendar are speeches in 1.5 hours, 2 hours from now. So we really have a light hour coming up. All right, see if I can close a few more trades, recycle a few more trades, and then I'll leave you guys with a plan. Oh, there we go. All right, so 790, somewhere around the 800 level would be a nice, nice place to find respite today. All right, somewhere down here. 790, 800. All right, one box lower than the low. All right, so right around here would be a good place to end the day. But again, anything can happen. This is why I'm leaving my swing trades. Right? I aim to close the swing trades at this level, and I aim to be making 3 pips, 3 pips, 3 pips on the way down there. Okay, so I will not be a buyer unless we revisit up here. Right, so there's a long way to go before I change my mind. All right, so we're closing a bunch of winners. Let's see if we can recycle a few, and then I'll let you guys go a few minutes early. If you already are winning and you've met your daily average, leave the casino. Do yourself a favor. Don't overtrade. That's our nemesis. That's our brain wanting more. We don't need more. We need consistency. All right, there we go. Now I'm done. I'm gonna leave you guys be, right? Remain bearish, remain selling, and we expect a repeat of what's happened in the last few hours, right? We expect lower lows to come. And so just, dig your heels in. All right, I'll leave you guys be, and I'll see you guys tomorrow, same time. More success coming our way. Enjoy yourselves. Trade safe. Trade small. Bye-bye.